Hey, what's up guys? In today's video we're going to be talking about volatility squeezes and how to play them and how to know what directions to play them. So what is a volatility squeeze? A volatility squeeze is a period in which the market gets very tight, the market range gets very tight and eventually has to break out. This is just a general rule of thumb of the market, the stock market, any stock in that isn't a pump and dump shitcoin or whatever is going to have periods of tight ranges followed by breakouts. That's simple stuff. Everyone in the stock market knows that. Whenever you see a stock flagging, going up and down, doesn't know which direction it wants to choose, it will be followed by a bigger breakout. Now, the question is, which way are we going to break out? That's the harder question to answer, right? Well, using Bollinger Bands, we're able to find a little bit of help in answering that question. So we're looking at the Microsoft chart that I had open. This is a trade that I personally took. So this is a 4-hour timeline. So how do you read this? So we had a breakout of earnings. We had a huge gap up in earnings, right? So you could see that when we had a gap up in earnings, before that we had a very tight range, considerably tight range. Not too tight, but it was pretty tight. We unwinded and we had a huge big range down. This huge big range. Whenever you see a big range like this, you can see a lot of gap between the two bands. You will see that it's followed by another tight bottlenecking of a range. Now, how do you play the bottlenecking of this range? Well, you got to see what the Bollinger Bands are telling you. And yes, the Bollinger Bands do show you a range of up and down, the higher end and the lower end. But more importantly, what I'm looking at is this basis point of 0, the middle. It's the middle of the Bollinger Bands. It's the middle of the high end and the middle of the low end, right? So what you want to do when you're reading this type of candles, and when using different, you can use this on any time frame. I'm using on the 4-hour chart because this is a chart that I saw this on. So the 4-hour chart, I personally saw, look, we were in this very tight range. You want to use this 0 point, this orange line, as a direction picker for you. You want to see how the candles react to the 0 point. Whether or not we're rejecting it, whether or not we're bouncing off of it, whether we're riding it, we're on top of it, whatever it is, right? So on this Microsoft chart, you can see that we're riding this orange line. We wicked off of it once, twice. We touched it, followed by another green candle. Green candle wicked off the bottom Bollinger Band, wicked off of the top Bollinger Band. Green candle, rolled it, and then look, I'm looking to play the breakout, the huge move. So we can see that this is a bullish price action, obviously, because we keep riding this orange line, this orange basis point. We're not going beneath it. But in general, you want to remember that you want to use most candlesticks. Maybe one candlestick falls underneath the orange line, or one candlestick falls on top, or whatever. You want to use the most average amount of the candles. If most of the candles are green above the orange line, you want to consider that, and then you play that side. So look, I saw that we're up on top of the orange line, and then boom, my call entry was this right here, call entry, and we gapped up overnight. We saw overnight movement, and look, we opened at I had 310 calls. We opened at 306. We filled the gap all the way to 310. That's a 50% trade. I had swings for next week. They weren't supposed to play out that early, but they did. 310, 50% calls. I took them. I made money on them, whatever. If you played the 0 DTE, however, you did make 200 to 400%. I was riding those contracts, the swing ones. I didn't want to double dip. I was in I was in the 1 DTEs a day earlier. I made 60% on those. But yeah, you can see how, like, this type of movement, the unwinding of the stock, really has a lot of beneficial, like, price action to it. You can see this in other ways. I'm gonna look at Apple right now because Apple had a huge move, right? So Apple, you're gonna see, if you continue being bullish, let's say the stock goes up. This Bollinger Band is gonna come and get tighter, and this one's gonna get tighter, right? Now when I move it, you're gonna see the candles. The candles are gonna start flagging up and down. Let me choose different colors. So Bollinger Bands is gonna be blue. Let me redraw this. Give me 1 second. So the Bollinger Bands, it's going to start riding the Bollinger Bands up. If the price action continues to go upwards, this lower Bollinger Band is going to go up as well. Lower Bollinger Band is going to go up as well. I don't understand why the color is not saying different colors, but it is what it is. So the price goes up, the lower Bollinger Band is going to go up as well, and eventually the price is going to start rejecting. Your job is not to call top. Your job is just to play the price action that makes the most sense to you. And then we're going to start a period of flagging up and down, up and down. But this lower band is going to continue to come up like here. It's going to come like this. This is a bad drawing, but it's going to come like this. It's going to be underneath the bars. And the top band is also going to be underneath the bars. What you're going to notice is there's going to be an orange line also. So let me draw another one. Brush again. It's going to be an orange line right here. It's going to come in the middle. Now you want to see where the candles are moving. Let's say the candles are generally on top of this line. Then you're going to be like, okay, I see the candles are on top. What do I want to do? I want to play calls. So you're going to play calls, and you're going to play calls on the breakout. Your job isn't to find top or bottom. Your job is just to play, oh look, volatility is squeezing. I'm going to play that volatility squeeze. Price is moving upwards. Volatility is tight. I'm going to play that volatility squeeze up. Basically that. And I want you to know something. You guys should be using VIX as an indication of volatility squeezes. Right now, VIX is kind of flagging up and down. It was on a downtrend for a long time. But you guys want to make sure that you use VIX as your friend, because when VIX is also tight, you can see how VIX is tight right here. It's winding up. If you look at the one-day chart, it's a little bit more clear. Look, we had a huge volatility squeeze. Look, I'll show you. Right here is considered a close, like where the bands are getting close. The bands are getting close. So we see that we're riding the top band. We're rejecting the bottom. We're riding on top, and then boom, we squeezed up. Basically that. You can use VIX as an indication of that as well. I bet there's more downside to this market, more downside to VIX and more upside in the market, just based off this price action right here. You could see how most of the candles are underneath the lower band, and as we get closer and tighter, we'll probably have a squeeze downward to maybe 13 area. I don't know. You just have to use that type of stuff. Everything in this market is a resource. Try to use everything as a resource. Don't think the market's against you. You can see that we had chop days, 1, 2, 3, 4 chop days, and we're followed by a green breakout day. And luckily enough, I was able to play that breakout day. You can play it on any stock really. You can play it on SPY. As SPY gets closer, like this right here, we had a tight squeeze. I know it's not the best example of a squeeze, but you can use different time frames as well. You can see how this is considered a squeeze, this is considered a squeeze, and you want to find where the candle's going. Okay, so look, this candles are rejecting the bottom. We're riding on top. All these candles are on top. We got rejected, but we're still riding. You can play calls all the way up here. Then you could play, we're rejecting the orange line. We're going down. And you could play puts on the way down, so forth and so on. Simple stuff, really. Nothing too difficult. You can see this. Look, we had a huge gap right here. Finally got tighter. You can see most of the bars or most of the candles are above the orange line because we're rejecting the lower end. And you can see, look, you can make an argument that we're rejecting both the upper and lower end of the bands, but ideally you want to look at this on multiple time frames. And if you do look at it multiple time frames, you'll see that, look, this candle right here was confirmation of a breakout, that you can play the calls all the way up. Simple stuff, really. Nothing too hard. But however, I know a lot of people don't use Bollinger Bands like the way I use Bollinger Bands in my strategies. Obviously, I'm using other stuff as well. I'm not just using Bollinger Bands as the one like be all make all of my strategy. However, it is there. It is definitely there. If you guys like this type of video, drop a like, drop a comment. I know this is like a quick, not as well done video. I have finals coming up. Gonna have to focus on that. Try to get this video out there. But yeah. I'll see you guys next time. I'm glad you guys liked the video. We're growing pretty fast. We're almost at 100. 30 more subs, we're at 100. So if you guys want to be part of the first 100 people that subscribe to the channel, I don't know, man. We're almost there. So drop a sub, drop a like. Anything helps. See you guys next time.